Why do so many Kenyans prefer taking a loan from a SACCO rather than from a bank? Now, if you are to ask most Kenyans who belong to a SACCO, one of the major reasons they will tell you they joined this SACCO was to access loan products. Of course, there is the element of passive income, that is through dividends and the interest on unwithdrawable deposits, but access to credit remains one of the reasons Kenyans join SACCOs. Yet, commercial banks and microfinance institutions are also in the business of providing loans to their members. Here are 5 reasons why you may want to take a loan from a SACCO rather than from a commercial bank or from a microfinance institution. Number 1 is the lower interest rates. Most SACCOs will have rates that are significantly lower than the market rate from commercial banks. The majority of SACCOs issue loans at a rate of 1% per month on a reducing balance. This is quite affordable compared to most commercial banks, where the interest rates are going as high as 22% per annum. Number 2, and related to the first point, is that SACCO loans are not subject to the central bank's base lending rate, which means the rates are more stable and are not prone to market forces, as would be the case with a loan issued by a commercial bank. Now you remember, commercial bank may give you a loan at 18%, and then when the base lending rate, which is the rate at which banks borrow money from the CBK, increases, then they also increase the loan even if you're already servicing that loan. SACCOs, on the other hand, issue loans that are not subject to the CBK's policies, which then means the rate at which you signed off on the loan is unlikely to change throughout the term of the loan. Number 3 is that even when you have borrowed a loan or you have taken a loan with a SACCO and you have used your deposit as security, those deposits also earn interest, and your shares in the SACCO also earn dividends. That is, unlike a bank, if you had some money in a bank and you went and took a loan, say for 1 million, the money that you had in the current account will not earn any interest. Now, with a SACCO, if you have 300,000 worth of deposits and shares, and you use that as security, and you got some guarantors and took 1 million shillings, you'll be paying interest on the 1 million shillings, but the 300,000 shillings that you hold either in unwithdrawable deposits or in shares will earn you income. That is, you'll be getting, at the end of the year, you'll be getting dividends on the shares, and you'll also be getting interest on the non-withdrawable deposit, which makes it even cheaper to access this loan. Number 4 is eligibility is much easier when you're accessing a SACCO loan. The only requirement will be that you are a member with good standing and you have been contributing, and your contribution, they are used as security. And if you want to borrow more than you have already saved, then you will need to get guarantors to access this loan facility. With a bank, the eligibility terms may be a bit strict. You may need to have collateral, or if you are taking a personal loan with a bank, you will be required to provide other documentation, for example, an MOU between the bank and your employer, or there might be a certain threshold on your income before you can access a loan from a commercial bank, especially when it's unsecured. Number 5 is that some SACCOs have member welfare arrangements where you may find, for example, when a member dies during the term of the loan is insured, which is also the case with commercial banks. But then the SACCO may have extra arrangements where you may find some SACCOs will give the beneficiaries double the amount that the member had contributed on top of writing off the loans that the member had. You remember, with commercial banks, some loans may not be written off when the member dies. For example, if you took a secured loan, some loans may not automatically be written off upon the members, which gives the members a bit of an edge when it comes to the welfare of the member. Money254.co.ke has written more about some of the considerations to make when deciding where to get your loan. Click on the link provided to learn more.